Donald Trump continues to lie about the economy. I finally had a chance to listen to and watch the State of the Union address, where he referred to the economy as being dynamic and robust. But if you actually look at the data, this economy is not robust and it is not dynamic. Now, before I get into the actual data and the information, what I want to do is I want to play a clip of a Bill O'Reilly interview that he did with Trump when he was campaigning to become the president, so it can give you a context as to where he was 3.5 years ago as to where he is today. Here we go.
Because I'm self-funding, okay?
Now,
but
how are you going to bring down the debt, though? I mean, look, with all of the Social Security payments, with all of the Medicare payments, with all of the social welfare programs that we have, how is any human being going to bring down the debt? I mean, what are you going to do?
Okay, Bill, are you ready? Okay.
I'm ready.
So we have a country. We have a country with no growth. We have no growth. You know, last quarter, did you see that? Practically zero growth, which is almost unheard of. When China does 7%, they're practically in a depression. We do nothing because our jobs
are leaving.
So
you're going to grow it, but how will that bring down the debt?
No. I'll tell you how it's going to bring it back, because we're going to create a dynamic economy again. We're going to bring the jobs back from China, from Mexico, from Japan,
still owe the money.
From Vietnam. No,
you still owe the money,
Bill, but
so you bring it back. So how are you going to get the debt down?
Because the country is going to start growing and will be up to 4 and even 5%. And when we do that, we pay it back so easily.
How?
It's easy to pay it back. How? Because essentially, if you look at the country like a profit-making corporation.
So, in the interview, Trump said that the economy was going to be growing at 4 and 5%, and that was going to take care of all of the tax issues, take care of the deficit, and take care of all of the bad trade deals that we had at the time. Well, here we are now 3 years into his presidency. GDP in 2018 was 2.9%. That's not over 4. GDP growth in 2019 was at 2.3%. That's not above 4. So clearly, he lied about that, or it just didn't materialize as he said it would. Now, on top of that, we are running $1 trillion deficit thanks to the tax cuts that he gave to the rich. In 2019, the deficit was $984 billion, and in 2020, it's projected to be over $1 trillion. Now, what did the wealthy and the elites do with those tax cuts? They didn't go out and hire more people. They didn't go out and invest in infrastructure, do CapEx spending. No, they went and did a bunch of stock buybacks, and we'll get to that in a second. Now, when you look at household debt, at the pre-recession high, the household debt was sitting at $12.8 trillion. Well, today in 2020, household debt is sitting at $14.5 trillion. Now, why is this significant? Because we've seen what happened after the high in household debt, pre-recession levels. Well, there was too much leverage in the system and too much debt, which led to what? The recession. Well, here we are now in 2020, and we're sitting at a record high of household debt of $14 trillion. But see, things are different now. Back then, the Fed had interest rates higher. So when the economy turned sour, they were able to cut interest rates to buffer that. Well, interest rates are almost at 1%, and we're running $1 trillion deficit, and the household debt is increasing. If the economy was so robust and it was so dynamic, the debt actually should be contracting, not growing. Then when you look at student loan delinquency rates, 1 out of every 9 student loans are currently more than 90 days late. That's not a sign of a robust, growing, thriving economy. Also, Trump always talks about the unemployment rate. Well, if you look at it, when Obama was the president, the unemployment rate was already falling. When he did that interview with Bill O'Reilly even said unemployment is currently at 4.9%. So clearly, unemployment was already falling when Obama was in office. So when you compare the Obama economy to the Trump economy, it's really just more of the same. Record high in household debt, record high in credit card debt. So basically, all of this consumer spending that you're seeing is really Americans going deeper into debt to consume goods and services. That's not healthy. Debt should be coming down if the economy was thriving and it was robust. We're running $1 trillion deficit underneath a Republican president. That's really just more of the same from what Barack Obama was doing. Also, when it comes to manufacturing, we are just now coming out of a manufacturing recession. We're losing manufacturing jobs because of the trade war. And when you look at this quote unquote phase 1 and phase 2 deal, no one really knows if China's actually going to follow through and stick to what they agreed to, because there's nothing solid that's actually been put on paper. Now, some of you are going to come on this video and you're going to talk about the stock market. A rising stock market does not mean that the economy is healthy. Number one, it's just paper wealth. Unless you're actually selling your stocks and cashing out your 401ks and your pensions today, then you haven't recognized the gain. It's really just a gain on paper. My mentor became a millionaire on paper during the dot-com bubble. Well, guess what happened? Once the bubble popped, because he never sold his stocks, he never recognized any of the gains. Number two, most pension plans are grossly underfunded. So even if you cashed out today, you haven't invested enough in your pension to actually be able to live off the money if you cashed out today. Number three, if you look at the top 1%, the wealthiest people in the world, they own more than 60% of the assets in the U.S. stock market. So it's not really going to benefit everyday Americans because, as I said, most of you are grossly underfunded. Your pensions are underfunded and you don't have enough invested in the stock market. And number four, when you look at the tax cuts that Trump gave to the corporations, to the elites, they didn't go out and hire more people. They didn't go out and pay people a livable wage. They didn't go out and invest in CapEx and infrastructure. What they did is something known as financial engineering. Apple is sitting on hundreds of billions of dollars. And you know what they did? They went and did record stock buybacks. Now, why is this significant? Because if you actually compare earnings growth to the rise of stock prices, you can see that the prices are rising and outpacing growth at an astronomical rate. So it's easier for these companies to beat their earnings because they're simply just buying back their stock. And also, when you do stock buybacks, the market operates off of supply and demand. Well, if you take supply, meaning you're buying back your stock, but the demand remains the same, if not increases, well, guess what happens? It's easy to pump prices and push prices higher. And then when you look at the Fed injecting liquidity, i.e. printing money out of thin air, it's forcing investors out of the bond market, which is more stable, and into risky assets like stocks. When you look at QE1, QE2, QE3, and now what they're doing in the repo market, is forcing people into the stock market. So when I hear Trump touting the stock market, that does not benefit everyday Americans. Now, when you look at Elizabeth Warren and Bernie Sanders and Bloomberg and what other candidate you see over there on the Democrat side, they don't have any answers either. The reality of the situation is this. We have corporate welfare. We have socialism for the elites, we have crony capitalism for the elites, and we have rugged individualism for everyone else. And these are structural problems that most politicians, let's just be honest, they don't want to deal with this. And we are going to have to see a major reset in order for us to really solve these problems. Now, how that reset will take form, none of us truly knows. It could be a currency crisis. It can be another recession, a depression, a war, a pandemic. But we're going to need something that's really going to have to shake the core and the foundation of America to get these politicians to actually solve these problems. And I'm not a doomsday guy. I'm not some anti-Trump social justice warrior. I'm not a Democrat, nor am I a Republican. I am an independent. I vote my interest. But when you look at these problems, you can't deny what's happening here. Now, there's going to be a lot of opportunity for people to invest. The markets are like pendulums, right? They go from overvalued in one sector or one area to undervalued, and another area goes from undervalued to overvalued. So whether you're investing in gold, crypto, commodities, whether you're shorting the market, there is going to be a ton of opportunity. You just have to find where that opportunity is going to be. But as of today, 3 years into his presidency, you can't deny that he has not delivered on any of the things that he said was going to happen once he became the president. If anything, he's oversold everything that he's accomplished and he's under-delivered. So please drop a comment below and tell me, what do you think? Do you think that this economy is robust and dynamic and we're having amazing amounts of growth? Or do you think that it's really just more of the same and a continuation of Obama and Obama policy? So like the video, share the video. If you're not subscribed to my channel, please subscribe, hit the notification bell, and also join my mailing list so you'll never miss another one of my videos.